Highlights from that special presentation by CNBC TV 8 and 18 and Reliance Mutual Fund Mission Prosperity. Now, this is our initiative to increase investor awareness about mutual funds. And we had some of the best voices from Dalal Street sharing their investments, sharing their ideas for becoming a better investor. And a lot of key things being spoken about, how to let go of stocks that are on a losing trajectory and how to stick with stocks that have a winning streak. So conviction, letting go of ego, all of that being spoken about. Listen in.
The two biggest things is staying with your conviction and accepting that you're wrong, which means actually eliminating your mistakes quickly, taking your losses quickly, and the ability to ride with your conviction, not just 1 year, 2 years. If you see the returns these people have made, the power of compounding comes in by definition when you are invested for multiple years. And to underscore that point, Warren Buffett, who's $65 odd billion today, was actually $1 billion when he was 53 or 54. So the power of compounding from 53 to 85, and in a private conversation he's actually said that all that he did after that was eliminate the, in a sense, the foibles of youth, if you will. The mistakes that you make as a youth got eliminated when he was 50 plus.
But what are those mistakes?
Exactly things like this, the temptation to stay with the most difficult thing is to take your loss and get out and say, I made a mistake in an investment.
General theme is that people stay invested with their loss-making investments and they book profits, when a stock goes up 10%. In your experience, what should be the holding period? I remember I was having a conversation with you. You said 10 baggers don't interest you anymore. You are now looking at 50 and 100 baggers.
Well, I was always looking at those, but not that I've made too many of them. But, just on that point that Jake's mentioned, I'd like to summarize it in one line. It's about time, not timing. So, a lot of investors get too caught up with timing. Ye bottom aa raha hai, pakad lete isko. But that is, very hard to do. Just spend time in the market and everything gets taken care of. In fact, it also forgives you for some of the mistakes you make. My own experience is actually the mistakes, fall by the wayside because the winners are so massive in size that the mistakes look very small in hindsight. So if you're not even in a position to detect that, it's still not a problem, but you have to spend time. And time, I think, is not about 1 year, 2 years, it's multiple periods of 5, 7, 10, 15, 20. I like to believe it's like your whole life career. So you start investing when you get a job, say at 25, and then you invest all the way till you're 60 and then enjoy the fruits. So say 35 years.
Tell us about one story that you chanced because of your research and one story that you chanced because of luck.
And you can't say Eicher Motors and Hero Motocorp. So that's ruled out.
Okay. So where we made it because of research was Bharti Airtel. I think, can I go with that?
Yes, of course.
Okay. So that I could see, because right now telecom is very hot and it is very relevant. So in 2003, India didn't have telephones. I mean, we had about 40-50 million fixed lines in a country of billion people, and we had 50 million phones, and it was almost impossible to get the phones and even for the government to provide despite all the intentions. And here comes without wireless, and you could execute like every quarter they were growing by 100%. The demand was so massive, and yet the stock was available at Bharti stock was available for 5,000 crores at 25 bucks, and that was the only company listed, and incidentally that was the best and the largest. We could figure out when in February 2003, when Mr. Mittal announced that they have broken even, we could figure out in next 5 years this company is going to make at least 25,000 crores, and the stock was available for 5,000 crores. In next 2 years, the stock went up by 50 times from 25 to 1,200. So it happens. I mean, in this kind of companies, and this is an era of internet, everything is exponential, and you'll get a lot of stories, and more so going forward, which will start from 100 crores or 200 crores. You would have not heard the name, and suddenly become global, and it will become few $billion. What has taken for HDFC Bank or Bharti or many companies to go travel $10-15 billion or $20 billion, 20 years. It will take maybe 20 months, 20 quarters for them to just go like rocket. Because now the marketplace or opportunity place is global, no more local.
What will Trump do to the markets? Are we Is he going to create a trade war and therefore spoil the good game that's going around in equities all over the world? Or are the next 2, 3, 5 years going to be good years for growth and for equity?
So, Lata, I think sequencing is important with respect to the US President's policies, and there is not enough clarity right now for me to actually make that call. At one end, he is likely to offer tax cuts to corporate America. At the other end, he's going to probably levy a border adjustment tax. Though I felt in his last speech he has diluted the impact of that or his intentions. So depending on the sequence, it will determine how the market behaves, say in 6-month time frame. But I don't think the market will care that much, because right now we are in a global reflation trade. Global growth is heading higher, global inflation expectations are heading higher, rates are heading higher. This is a good environment for equities. So you can see that rub off into India. 80% of what's happening in India since December is global. It's not local. And you can see the correlations are high, and global economy is actually surprising on the upside.
How do you reach out to investors? Because there are vast hordes who, probably shy away because of this experience that they have waited it out. Probably it was an unfortunate choice for them. And it is usually not unfortunate. It is usually sequenced that way. It is only when markets are at all-time highs that mutual funds, investors, media, everyone are talking about stocks. White papers talk about stocks. So you often are in a situation where hitherto non-investors come into investment at that time. So what's your advice to investors?
So that's what, Lata, is not. I think at least we have been very consistent, and I've been interacting with your channel for last 10 years. Whenever there is a panic, and you call us and we say that this is the time to buy. We're not advocating people that, when there is a euphoria. See, we always have been saying this. Either you get good news or you get good price. If the news is fantastic, conversely, there has to be something wrong with the price. And if the price is fantastic, the news will be bad. So I am saying you have to just consist. It's just a sheer bad luck that you first time invested in 2007. It's just a sheer bad luck that,
You hear about mutual funds and investments only at such times.
No, but that is why this mutual fund day, that's why Sandeep's biggest idea, that it should not be an event of a 9,000 Nifty. It is to be a consistent, every 7th you say, for the next 25 years, I am going to invest. I have faith in India. I have faith in Reliance Mutual Fund, and I have faith in HDFC. So these are people who will make enormous amount of wealth. So it is to be a habit. You cannot just casually treat this. It's a serious subject we are talking about. Making money is not non-serious, not like watching a movie. It's not like whenever you decide that you will come in, whenever you will decide you will go out. So I am saying you have to have some conviction. And the conviction which I am imparting is that you have to be consistent. If you are an SIP investor, don't worry about what has happened in the market. You come, every month you put money. Over a period of time you will realize that the returns are better than what you expected.